Mahesh Nandurkar of Jefferies today has written a very interesting note as far as the entire PSU stocks are concerned. He's actually gone ahead, number one, and warned everyone not to stay underweight as far as the PSU space is concerned. He's saying that Indian PSU stocks in the recent time has actually emerged as a key beneficiary of the value rally that we are seeing across markets. He's saying that the government moves, strategic decisions have had a huge role to play as far as the outperformance of PSUs is concerned, at least in the recent times. He's saying that the government has removed the ETF overhang and has also prioritized strategic divestment. Also, what he is saying is that despite the fact that the PSU Index has outperformed Nifty by 18 percentage points over the last 3 months, he believes that valuations are still a good 20% discount to historical averages, and he believes that the catch-up trade that we are seeing as far as the PSU stocks are concerned continues to have more legs. Now, the other thing that he said is that the government recently shifted over to a policy of privatization from the year 2019 onwards, and this has reaped rich dividends for the government as well as the PSU stocks. Names like BPCL, Air India and Shipping Corporation have already received expression of interest from significant private parties. Also, remember, the most important fact is that the Prime Minister himself, Mr. Narendra Modi, is in his recent speech, has clearly argued for more privatization, saying that the government has no business being in business. PSUs as a trade, as a bunch, still trade at sub 10 times price to earnings. So valuation there continue to be attractive. They also offer 4 times the Nifty dividend yield at 3.6%. Now what they are saying is that, especially what Mahesh Nandurkar is saying, is that the favored PSU picks for Jefferies at this point of time is SBI, Concor, NTPC, HPCL and Bharat Electronics. For him, SBI is their preferred PSU bank, given the fact that they see normalcy in economic activity soon. They're saying that the good underwriting practices that SBI has undertaken will abate concerns as far as credit quality is concerned. Valuations too are at a significant discount to private banks, and he believes that this particular valuation can narrow quite significantly. NTPC at this point of time, according to them, is the preferred power PSU pick, given the fact that the company has improving ESG focus, capacity addition driven growth as a trigger, and also the operation efficiency improvement and coal mining profits is something that could help drive re-rating for NTPC. HPCL, they believe HPCL will see fastest auto fuel volume growth amongst peers. Other triggers for them include, number one, benign valuations at 0.9 times FY23 price to book. They see a 20% plus cyclical average ROE and also see a 45% PAT CAGR over FY20 to FY23. Now remember, Container Corporation is another stock that they believe will benefit from the dedicated freight corridor-led volume growth, and Bharat Electronics, they believe, will benefit from increase in order flow led by defense orders from the government.